kicking things off with market action, which is, in short, bad, really bad. Yesterday saw the biggest single-day decline in 2 months for the top token and marked a continuation of the 5-day downtrend that began after the price of Bitcoin topped $25,000 on the 14th. And this isn't just limited to Bitcoin. Ether also dropped by more than 9% in the past 24 hours, and other top traded tokens like Ripple are showing double-digit losses. The catalyst behind the move, at least from what I can tell, is the increasing recognition that the U.S. central bank may not return to market-supportive policies quite yet, as inflation continues to rage both domestically and abroad. Last month's rally kicked off in late July after the Fed raised rates by a historically large 0.75 percentage point, as largely predicted by markets. And coming out of that news, these markets seemed to assume two things. One, that inflation had peaked, and two, that the Federal Reserve would ease off of monetary policy moves that have sunk risk assets across categories for the last couple of months. Yesterday, minutes from that July Fed meeting were released, and the disconnect between what the central bank was saying that they wanted to happen and what markets had actually done since the meeting seemed a little bit too difficult to reconcile. And following that release, we also saw several regional central bank presidents give talks with traders in traditional markets interpreted as bearish for risk assets. So there's a lot of action here, but it's actually mostly not about cryptocurrency from what I can tell. Really, cryptocurrency is the cork that's sort of floating up and down with the tide that is monetary policy and markets in general. Zach, I'll kick this one to you, back to you first. Kind of what's your read on it, having seen markets for so long? I didn't mean to call you old, but sorry.
It's okay, I'm old. Don't worry about
Adam's just on a roll today.
I am. Sweatshirt
First
man.
with the blue.
Back in my day. Yeah, markets, man. Markets be like that. They'd be moving up and they'd be moving down. It's interesting to watch, obviously, and many people in the space are highly attached to the number of the price of Bitcoin and of Ethereum. Ethereum especially has been sort of seeing a really strong run of late. So for it to also sink speaks to the broader climate. Definitely macroeconomic headwinds, remain a big story, I think, for the crypto markets, right? I think Bitcoin has long been hypothesized as an inflation hedge. This is sort of the first adverse macroeconomic environment in which it has been in the spotlight, and it's not doing great. It's not doing great, and I think it's struggling to stay north of 20,000, which is a pretty low number for something that touched as high as 69,000 not too long ago. So to watch the vacillation, the up, the down, the sideways, the crab walk, that's markets for you. And that's what I got. So Jen, I'm going to throw it to you for your thoughts on what is a pretty red day over in the markets.
I had much of the same thoughts. I think this is a really good reminder that it might be tempting to put a bunch of money into Bitcoin or Ether when the price goes down, but it's a good reminder that crypto is still a volatile asset. So don't invest what you cannot afford to lose, or at least cannot afford to hold on to for a very long time. I think before, the price of Bitcoin was an indicator of what's going on in the industry, much to what you were saying, Zach. Right now, it really just kind of follows the macroeconomic trends. So I think we could have expected this to happen. So if you are new to the space, I don't think you should be put off by the industry when you see the price go up and down. I think it's very obvious that the industry is still trucking along. There's still money piling into a lot of different projects, but the price of Bitcoin is really just kind of following traditional financial trends. Sandali, what do you got?
Well, I don't know. I'm in pink. I'm feeling less Mr. Burns today. So I'm just going to inject some tiny good news into this. You know what's not following macroeconomic trends and having a great moment? Fan tokens. Fan tokens are up this week and
this one in a weird direction
all over the place. I know. Bear with me. It's football season in Europe and everywhere else, so it's a good time. People are, excited about a lot of new updates from that space. And one token, Santos, is up like 30% or something in the last 7 days. So, yeah, crypto can be bad, but there's also good bits here and there in it and something for everyone, right? So I don't know. It's Friday. I'm in a good mood, so I'm gonna be like, yeah, it's risky. Yeah, it's weird, but it's also fun and exciting if you know where to look, I guess. So sorry about inflation and everything else, Zach.
Honestly, with just the out of left field take. The economy sucks, but some random low cap fan token that you've never heard of is pumping, and that's good. What,
anything
so
about
Audley,
it.
what are you
on a
doing?
Friday.
What are you doing? I need to toss it back to Adam to rein it in. Adam, what's going on?
I saw Adam's
Oh,
face.
man.
I'm excited for this. Go on.
I'm honestly not sure if it's better giving it back to me.
I'm
You
ready.
know, the thing about all of this stuff to me, you know, for a long time I've considered most of what happens in crypto to be gambling, right? Because effectively what you're doing is you're betting on certain outcomes. It's speculation. There's really a small difference between gambling and speculation. One of the most frustrating things about markets today is that markets tend to trade pretty close together, and that's because of these macro trends that we're talking about. And so there was a story yesterday that jumped out at me about the Bed Bath & Beyond action that was happening over in that stock. And there was a story of a 20-year-old trader who collected $27 million from friends and family to acquire a more than 6% stake in the company, which he then sold for a 600% profit less than a month after doing the trade, right? That's an insane story that can only happen in markets and clown world, where like nothing happens for reasons that make sense and everything happens because it's all about something else. So the way I introed this story was like 10% about crypto and like 90% about what the Federal Reserve is doing. Because to me, that's almost the only thing that matters in markets today, which makes markets not fun. It makes it so markets are, like you have to care about all of this stuff that has nothing to do with the thing that you actually are trying to care about, because it's all that kind of matters. So, it's a less fun take, right? But that's the thing that I find so frustrating about markets today, is just that the way that you trade them is not how you should trade them. You trade them instead based on all these other things.